Okay, principal residence rules. As I said, a couple of goodies in here I thought you might like to know, and we're going to cover the rules soup to nuts. Who gets to claim the principal residence exemption? Well, in order to do this, the property has to be ordinarily inhabited by somebody. I own the property. The property has to be ordinarily inhabited by me, or by my wife, or by my kids, or from that nice woman I used to be married to. On a good day, I can call her that. Okay, by my spouse, my kids, my former spouse. What's missing from the list? I can't claim the principal residence exemption on the house I bought, the mansion I bought from my parents. So properties inhabited by parents don't qualify, but spouse, children, and former spouse do qualify. In the case of a trust, and a trust can claim a principal residence exemption, but it can only do it to the extent that it has a specified beneficiary. A specified beneficiary of the trust is a person who is a beneficiary of the trust and who occupies the property. And it has to be occupied either by the beneficiary, spouse of the beneficiary, kids of the beneficiary, or former spouse of the beneficiary. So the same usual suspects are caught in that list. But only the specified beneficiary is relevant for purposes of claiming the principal residence exemption. I might have a trust with two beneficiaries, and I have a trust set up where mommy died and left monies in trust and a house in trust. I live in the house. I'm a specified beneficiary. I'm a beneficiary under the trust. I'm occupying it. My brother, who's a beneficiary of the trust, doesn't occupy the house. He's not a specified beneficiary. And we'll see that that's relevant later on, is that we needed a specified beneficiary, and there are implications to that. Now, the property has to be ordinarily inhabited on this. And given our great condo boom right now, this is getting to be, I find, a question that I'm dealing with more and more often. What constitutes ordinarily inhabited? When I look at the words, what comes to my mind is that I look at the cases of being a resident in Canada versus non-resident in Canada. I have to be ordinarily resident in Canada. And for the resident versus non-resident, that generally means my general mode of life is in Canada. Well, I'm looking at, again, on these houses, is that my general mode of life is to ordinarily inhabit the property. Now, it doesn't have to be full-time, but it has to be on a regular mode of life. A cottage will qualify, or a ski chalet, or a seasonal residence of any description will qualify because on a regular and recurring basis, I use the cottage, or I use the ski chalet. They qualify because I ordinarily inhabit it. It doesn't have to be full-time residence. The problem that I'm sort of facing is, how long do I have to live in that condominium before I can sell it? I want to get the principal residence exemption. Does 24 hours work? No. There was a case in 1985. 24 hours didn't work. Well, you weren't ordinarily inhabiting the property for 24 hours. You were camping out. 2 weeks, you're probably still camping out. You know, you have to have it as your regular, recurring mode of life. And that's about all that I'm going to say on that. Now, in some cases, you can get extensions on the time you can designate a property as a principal residence, even though you are not living in the property. I got transferred to Moose Jaw, and I rented my house. When I started to rent the house, there was a change of use. When there's a change of use of a property from personal use to income producing, there's a deemed disposition at market value. In order to avoid that deemed disposition at market value, I can make an election under 45 sub 2 to retain it as a personal use property. I still have to report the rental income, I just can't claim capital cost allowance. Side benefit on this is that if I make a 45-2 election, I can designate the Toronto house for up to another 4 years. But then I couldn't designate the house in Moose Jaw. Guess what? It's probably more gain on a Toronto house than a Moose Jaw house, but I don't know the answer to that. But I can designate only one of the properties, but I can designate the Toronto house for up to 4 more years. 45.3 is kind of the opposite. I know I'm not going to stay in my house for a long, long time, so I found this lovely condominium to buy. I bought the condominium. But since I don't really want to move today, I'm going to rent the condominium. When I move into the condominium, I've now converted it from income producing to personal use, a deemed disposition, tax on the capital gain. No recapture because I can't claim CCA if I'm going to do this election. But what 45.3 allows me to do is elect that the property was never an income producing property. That I can deem it to always have been a personal use property and get out of the deemed disposition. But I couldn't have claimed CCA on the property. Okay? So it allows me to then designate 4 earlier years as a principal residence if I do this. Now, on this transfer to Moose Jaw, 54.1, pretty rare circumstance, but if I transfer to Moose Jaw, I can get more than 4 years because I moved because of a job relocation, as long as I move back into the house when I retire or I die in Moose Jaw at work. Okay? I can get more than 4 years on it. So that's important on corporate transfers, not really our client base.